channel. I'm Doris. I'm here to show you about my stock account update. Today my stock account has made a loss of $3,009. The stock ended with up and Dow Jones up 500 points and the Nasdaq up 2.4 points. Inflation and slowing economic growth, the US is in the trap. So first, let's take a look at my stock account. Including the post-market price, my stock account has made a PL of negative 3.41%. And right now, the net asset of my account is $72,332.19. And right now, the United Natural Gas made a gain of 1.78% to $6.88, and the SPXU made a loss of 5.94% to $13.29, and the SQQ made a loss of 8.06% to $29.56. Dow Jones Industrial Average closed higher with a gain of more than 1.5%. Nasdaq Composite made a gain of 2.43%, and the S&P 500 made a gain of 1.96%. Right. The industries overall closed higher. The internet content and other tech industries closed with a gain of more than 3%, and the banking industry showed a gain of more than 1%. The U.S. stocks closed higher on Tuesday with the Dow recording its biggest one-day gain since January. Meta platform's strong results boosting the Nasdaq up 2.4%. The latest economic data show GDP in the first quarter and the inflation stubbornly high. Technology stocks are doing strong. Meta platform's share closed up 13.9% higher after the company said quarterly revenue beat analyst expectations. The company had better than expected results for the fiscal quarter. Meta platform, several analysts raised their price targets after the results. Industry leader Honeywell's quarterly report was better than Wall Street expected. Teladoc and Comcast were higher after earnings report. The Caterpillar stock, often seen as a barometer of the global economy, closed down 0.86% on Thursday. The company also announced results that far exceeded expectations, but investors' fear in its rising inventory suggests demand is slowing. LPL Financial Chief Global Strategist Kinsey Crosby said, "The market is holding its breath for earnings from big tech companies. Overall, it didn't disappoint, and the market needs that." The Lithium, head of investment at SoFi, warned investors that while most of the S&P 500 companies beat expectations, the worst hasn't arrived yet. Lithium said, "These companies' performance expectations have been downgraded by about 15%. As a result, the results are actually just better than expectations that have been sharply reduced. But that could be good for market sentiments right now, as the market doesn't like to hear lower than expected results." On Thursday's weaker than expected GDP data, some investors believe the Fed could end its monetary tightening cycle soon. The Fed will hold its monetary policy meeting next week and announce its latest policy decision. On Thursday's economic data, the first quarter GDP came at 1.1% higher, far below the expectations from 2.0% and 2.6% last. Real personal consumption spending in the first quarter was 3.7%, 4% expected and 1% last. The core PCE price index in the first quarter was 4.9% annualized, 4.7% expected and 4.4% expected last. The Labor Department reported that initial unemployment claims for the week ended April 22nd were 230,000 versus 248,000 expected and 245,000 previously. Inflation and slowing economic growth, the U.S. is in the trap. The U.S. economy has slowed before the recent bank failures trigger any credit squeeze. While the inflation is accelerating, this situation underscores the huge challenge facing the Fed. GDP rose at an annualized rate of 1.1% in the first quarter, well below the median forecast of 1.9%. The U.S. economy was slowing mainly by inventories. But accelerated consumer spending provide a major drive for growth. Still, economists warned about the quarter, saying the momentum was weak. To the Fed's dismay, the core food and energy free price index values accelerated by 4.9% between January and March, a record high in a year. Meanwhile, the Labor Department showed enduring strength, with a surprise drop in initial jobless claims in a single week. All this suggests that the Fed Chairman Colin Powell and his colleagues have more reason to raise another 25 basis points rate at their May 2nd to 3rd policy meeting. The Fed boosted the 2-year Treasury yield on Thursday morning. The data also show a rising risk of stagflation in the U.S., with the economy remaining depressed and inflation remaining stubbornly well above the Fed's 2% target. This morning's numbers are the two worst scenarios combined: slowing growth and rising inflation, said Chris Zacali, Instant Advisor Alliance's chief investment officer. Data to be released on Friday will also provide details about how consumer spending grew during the quarter. Economists expect the real personal spending to fall for a second straight month in March after falling 0.1% from 1.5% rise in January. Warm weather at the start of the year has boosted retail sales. Consumption was weak at the end of the first quarter. U.S. economists, led by Morgan Stanley, said in a report, in addition to weather-driven spending, less federal support for low-income residents on food spending also slowed later quarter buying activity. Zentner and her colleagues said, it is better to slow significantly in the second quarter of 2023 as the cumulative effects of tighter monetary policy and the banking pressures pushed the economic growth into the negative territory. U.S. economic growth slowed more than expected in the first quarter. Economists expect GDP to grow this quarter, but stall to 0.2%, and the survey showed. Future trading showed the investors saw a 90% chance of the Fed raising a 25 basis points rate hike next week, up from 79% on Wednesday's afternoon. Inflation remains stubborn, coupled with a continued strong labor market. These factors could allow the Fed to continue raising interest rates in May and even June, Cornerstone West Cliff Hodge said. That's all I have for today. Thank you for listening. Don't forget to subscribe and like. See you next episode.